Today I'll be teaching you some tips and tricks on solving control accounts. Now this video is for those students who find it difficult in identifying which error to put where. Like the error goes into updated control account or the error goes into the reconciliation statement. This concept is for A levels part 1. This video is specific for sale ledger control accounts and reconciliation statement with sale ledger balances. In order to easily understand which error appears where, we need to learn how invoice is processed. So first step 1, is you will make an invoice for the goods you sold. For example, you sold $100 goods to Mr. A. Now what you'll do is that you'll make an invoice for that. We're making an invoice something like this. It looks something like this. You'll have your date here, the item you sold, and the amount. Now this is a basic version for invoice. In real life it has many complexities like sales tax and amount, including sales tax and trade discounts and so on. Now when you have made an invoice of goods selling to Mr. A, the second step is making daybooks. Now there are many daybooks, like various daybooks. If you want a video for that, you can ask me in the comment section. For this specific question, we'll use sales daybook. Because what happens is when you make an invoice, you'll record this transaction into the sales daybook. Now what you'll do in the sales daybook, you'll write something like this: A debit and sales credit. Debit, credit. For example, you sold $100 goods, you write like this. Now this is an example of how sales daybook will be made. You can take another example. For example, this time you sold $500 goods costing to Mr. B. Not costing but worth. Like Mr. B debit and sales credit 500. And as you make an invoice or as you sold goods, you will make those transactions to the sales table. Now after the daybooks have been made, you'll transfer all those balances and you'll write those in the ledgers. Now we are step 3. We have done step 1 and step 2. We've already made an invoice, transferred the transaction into the sales daybook, and now we are transferring that amount from the sales daybook to the ledgers. Now for this specific video, we'll be using sales ledger, because this is the place where you have all your balances of your receivables, and you'll make accounts, either T accounts or running balance account. For this video I'll be using T accounts. You're making T accounts for every receivables. For example, earlier, like continuing the previous example, you have Mr. A and you sold $100 goods, so you'll write sales 100. You also sold goods to Mr. B. Mr. B will have his own account and he'll have sales 500. Now the reason for doing so is that you'll know the balance of each receivable at certain date. For example, at year end, because there will be hundreds of transactions, need to add all these figures that have Mr. A in it. So rather than doing so, what we do is that we take all the transactions of Mr. A and make his separate account for him. Sales will have a separate account too, but in a different ledger. You'll find the account for sales in the general ledger. Now after we have made all the receivable accounts in the sales ledger, the fourth step, or you can say the third step, part 2, is that at the end of the each year or end of a certain time, for example, your year end financial year ends at 31st December. So on 31st December, what you'll do is you'll pick the balance of the accounts. For example, you had two more transactions with Mr. A, like 200 and 300. Now you'll balance the account CD 300 and 600, and you'll write BD 600. So what we'll do at the end of the year, we'll balance all the accounts of all the receivables, and we'll make a list out of the balance that we obtained after closing the account. Like for example, in Mr. A we have 600. So what we'll write is, we'll write something like this: balances Mr. A 100, Mr. A 600, Mr. B 100, and so on. We'll list all the receivables and we'll sum it up. This total will represent the total of list of receivables that we see in the questions, that the total of list of receivable had balance of 600 or 700 or 800. Now this total of list of receivable comes through the ledgers. Now what we do is that in order to check if this 700 is correct or not, what we do is that we make an account from the step 2. Now this account is known as control account, because we need to check that if there had been any mistake while the transaction moved from day books to the ledgers. So what we do is that we make a control account. Any error made here, any error made in the sales day book, will therefore be updated in amended sales ledger control account. Now any error that you made in the step 2 and it won't be carried forward. Now the important part is that it won't be carried forward. The error only impacts step 2 and it won't be carried forward, not carried forward, then that type of error will be updated in the amended sales ledger control account. Now any error that we made in step 3 will be updated or amended in your reconciliation statement. Now sometimes students ask why a certain type of error is coming in both of these. Now we have a situation where the error will appear in both. Now there are certain cases. You won't have to remember all the cases, you'll just have to remember the steps that I taught you. If you think an error is made in step 1, now since it is made in step 1, of course it will be carried forward to the step 2 and 3, so it will appear in amended sales ledger control account and reconciliation statement. Now if you think an error that was made in step 2 will be carried forward to step 3, that error will also appear in both of these. Now if you have any questions or queries, you can ask me in the comment section. If you want me to solve a question using this tip, I'll make another video for you. Thanks for watching. Hope you were able to clear your confusion.